Welcome everyone, and thank you for joining iShade today for this webinar and Ask the Expert session, Building Your Practice During Tax Season, presented by Peter Vessenes. With over 30 years experience in the financial industry, Peter is the CEO and founder of Prophecy Incorporated, a financial software service for financial professionals, CPAs, and pro advisors. Prophecy is an all-in-one financial analysis and budgeting software from seasoned financial experts. Prophecy helps business owners and financial advisors alike gain powerful insights to manage cash flow, grow profitability, and increase valuation. Immediately following today's webinar, join us online for our live Ask the Expert Q&A session. You'll log on to iShade.com, click on the Ask the Expert tab, and then from there you'll select the Join Now button in the Building Your Practice During Tax Season listing. And then there you can ask all of your marketing questions from 3 o'clock to 3:30 p.m. Eastern Standard Time. And at the end, I'll give you a demo to show you where you can find that information. Peter, thank you for joining us today. This is where I'll turn it over to you.
Thanks, Nicole. Wonderful to be with everyone again. Hope you all had a wonderful holiday season and are getting ready for the insanity that is tax season coming upon us all. One of the things that I've been asked to do is to take some information that I've touched on in the past, but really build it into a more robust package on how do you build your practice during tax season. And I thought this might be a good idea. So this is a two-part series. We're going to go through half of it this month, and then next month in February when I'm back on, we'll do the second half. But hopefully this will be valuable for you. I know everyone's really frantically busy and working crazy hours, but I think it's a very, very important time if you're in the CPA industry, because this is the time, that's the busiest time of the year. Now, I want to open this up by talking about the fact that for many, it's really the only time you see your clients. Now think about that. These are the individuals that your practice, your career, your income, your livelihood is based on. And you're doing something for them that is, well, it's imposed. Let's face it, to do tax and audit work is a requirement of government. It's an enforced trading partner through the government. And you are the agent and the proponent and the individual that they depend on for doing this. And yet, as important as this is to them, and as important as it is to you, for many of us, you only see your clients this time of the year. Now, what does that relate to? Well, it's a personal, tax season. You try to do the individual's tax season, and hopefully it's a setup for working with their larger entities. Whether it's their estates or maybe they own companies, maybe they own businesses. But for the most part, this time of year is really dealing with their personal needs and their personal items. And now, let's face it, the tax law is complicated. It takes a lot of strategy in order to be effective so that they really only pay the taxes that they're required to. And you have to look at it in three levels, because you have to look at it in terms of short-term tax concerns, longer-term tax concerns, and lifetime tax concerns. And, because, frankly, for most individuals, it's not what they make that counts, it's what they keep. So we play a really, really critical role in their lives, and it's a huge responsibility. Yet, we also know that we have to help them with their businesses, and this also becomes a critical factor because for many of our clients, their largest asset is the business. Okay? So what else really is it that we deal with? I think one of the larger concerns that I'm seeing in the United States is that a lot of our services, a lot of what CPAs provide in their services is becoming commoditized. And the consumer thinks they don't really need you, or there's software they can do, or the lower middle income is, they're going to an H&R Block office. There's a lot of pressure on this from a business standpoint. Now, Bigger firms, they try to provide other services, value-added services. So obviously the big four, they make much more money in doing audit and advisory services, consulting type services. They make a lot of money. Some of the larger organizations, the regional firms, they also are trying to emulate what's going on in large corporations. But I'll never forget that, it was 3 years ago, because this is our 7th year for Prophecy being in business. I was approached by a large regional firm who was very, very interested in the product. They were trying to develop some of these analytical tools on their own, software programming. It wasn't going so well, and here we had this tool already. So they were very, very interested. This was, I think, 3 years ago, maybe 4 years ago, and our tool was in its earlier stages at that point, about having us come in to present it. But they wanted to approach it by bringing me into working with a specific vertical niche that they were working with. So the vertical niche happened to be dentists. All right, now, so I'm prepping for this, and I'm meeting with 2 partners who work with dental practices. So they do their tax, they do their audit, they do their advanced planning, they work with them in budgeting, and so on and so forth. So I thought, okay, these people, they work with dentists. So when I sat down to meet them, I said, you know, I used to help the dental industry about 12, 15 years ago, and I'm not sure how it's changed since then, but let me walk through what I do understand about how dental practices work. And so I went through, you know, there's a front office and there's a back office. And the front office is the administrative, and they do the insurance work, and they're filing all the paper, and they're making sure that people come in. And then there's a back office, which is the hygienists, the technicians, and they're really the sales team. And generally, the two don't like each other. And in many of these practices, they're populated, the front office and back office is made up of women, and the dentist may be a man, may be a woman, but it functionally is a challenging place. And I said, and so these are the things they face in terms of fiscal management, and how, you know, I used to be able to approach it before I had the tools, and so on and so forth. So I asked them, you know, is that still how it is? And they're just kind of nodding, yes, yes. We showed them the product. And when I talked to the managing partner a bit later, he basically told me that their team was a little overwhelmed because, though I hadn't worked in that industry for 10 years, I knew more than they did. And so what struck me was that here they're charging a high amount of fees and services for what they were providing to these practices, the dental practices. And yet, the level of stuff that they were doing was pretty basic and pretty fundamental. And what is happening now is, particularly with the economy's really not in a great recovery, people are a little more optimistic. The fuel prices have gone down. Gas, I got up here in Minneapolis, gas was under $3 a gallon, $2.98 or something yesterday. No, maybe it was under $2, $1.98. It was really, really low. Yeah, it was, I think, $1.98. And so, you know, there's a certain impact of that. But what struck me was our tool, even at that point, was intimidating to them because they weren't used to providing those kind of services. And so what has been taking place over the past couple of years is that the expectations of your business owners are starting to question the value in what you're giving them. All right? I trust everybody on this call has a great set of clients, and they all love you. But let's face it, if you only see them once a year and you're basically just helping with tax, maybe tax and audit, there's some missing parts because there's this downward trend in terms of understanding. Let me go back here. My screen just shot ahead faster than I expected it to. So there's a lot of things that the clients are getting, they're concerned, all right? Probably none of yours, but we're starting to see a lot of this trend out there. So the question then becomes, Well, what else is it that you can offer? Now, myself, I think it's much, much easier to figure out what your clients don't understand than trying to generate completely new clients. Creating new clients is quite a challenge, and very, very few accounting firms really understand how to do that. But there are things that your clients don't understand, particularly the business owners. And what I want to try and share today is how you can view your clients, particularly those that own businesses, and say, how can I help them in a better way? Now, fundamentally, what is it that a business wants to know? Can they build their financial stability? Even if you can't build their revenue, can they become more financially stable? Secondly, can we increase profitability? Thirdly, can I improve the valuation? Fourth, is there some sort of a succession plan? Is there an exit strategy? These are very basic things that owners want to know. Another simple one, how much can I pay myself this month? What do I owe in taxes up to this time this year? Do I really know where my true break-even is? If I sell 1,000 past true break-even, how much of that will be net pre-tax profitability to? These are not necessarily sophisticated questions, but those are the questions they're asking themselves on a daily basis. And there are a lot of things they don't understand. And there's reasons they don't understand them, and that is because standard accepted accounting practice principles, GAAP, G-A-A-P, Generally Accepted Accounting Principles, are confusing because the language means certain things to us that is completely confusing to them. So one of the things, what do your clients don't understand? The profit and loss doesn't show real profit and loss. So you can say, here, you should read your P&L statement and we should read your balance sheet. Or you might say, I need your P&L statement and I need your balance sheet. Maybe they never look at it. They don't even know what it means. They would assume that a profit and loss statement shows profit and loss when it doesn't, because certain capital distributions wind up in the balance sheet and they're not obvious. So if they have a loan, the principal on the loan doesn't appear on the P&L statement. It shows in the balance sheet. And it doesn't show as an expense. It shows as a decrease in liability. They don't even understand that that's cash out of their pocket. Now for us, we're used to this. We understand what it means, and so, but they don't get it. And there's so many elements in GAAP that are very confusing to your clients. They don't even know what a balance sheet really does. If I can look at a balance sheet on a month-to-month basis over a 12-month historical period and the P&L in the same way, I know a lot about what's going on in the company, more than they do. That's because I understand what it's saying. And they really need to know what's going on in the company. A few months ago, Prophecy added a feature to it called balance sheet forecasting. And the reason we added it is it's a growing requirement by banks for anybody that wants to borrow money from the bank to get a debt instrument in place. Now, we had, oh my goodness, we had like 130-some people registered for the balance sheet forecasting. It was the most attendance we ever had. But what is it? Okay, well, first of all, a balance sheet forecast is a way of looking at actual cash on a month-to-month projection in an honest way. So how would you have to do it? Well, first of all, you'd have to project your budget. Now, how do most people build budgets? They build budgets by taking a mean average of the previous year. Is that how your clients make budgets? That's not how they should make budgets. Is there seasonality? Is there trend? Is there business strategy? Okay, but a balance sheet forecast, if you were going to do a 3-year balance sheet forecast, you would have to build a budget over that period of time. You'd have to look for anomalies. Are there existing interest notes or loans? How do you account for the fact that they don't appear in the P&L, but they do appear in the balance sheet? So you have to amortize that. How about, what's another good example? The owner compensation. A lot of times that's not on the P&L statement. It's actually showing up as an asset in the balance sheet because the company is loaning the owner the money until the end of the year when we help them reconcile it because we figured out their taxes. Now, we know why we do this. They don't understand. I mean, they understand that we're not paying them on payroll, whether we are paying their quarterlies, but they don't understand how it appears in their reports. So balance sheet forecast is very, very complicated. And, frankly, most of the ones that I've seen are people guessing at things. So one of the things that Propency did was we built a balance sheet forecasting using our artificial intelligence budgeting tool, understanding what the debt instruments were. I mean, we literally built this. And, okay, so you do one. What good is it if it shows that despite all best efforts, the company's going to be upside down over $100,000 for 3 months? And that's why you want the loan. But the bank will look at that and say, we can't give you a loan. You guys are not going to be profitable. You even know how to turn it profitable. So one of the things we built into the tool was the ability to build scenarios, what-ifs, in a business strategy and time them in such a way that it has a way of reconciling that negative cash flow to justify the need for a bank note. They don't know how to do it. Those are the things that we're supposed to be doing for them. But, we get busy, we see them one time a year, and we're not really taking a fiduciary responsibility with the clients. Yes, we're taking a fiduciary responsibility in doing their taxes, or if they're paying for an audit, yes, we're doing that. But to me, fiduciary means I have to regard their money, their assets, as if they were my own and what I'm going to do for them. So how about regulatory requirements? My Lord, the growing list of regulatory requirements just becomes insane. Are we keeping current on what's involved in regulatory requirements? Are we making a point of communicating with our clients so that they become aware of them? I'll give an example. Our licensing for our software takes place internationally. As a matter of fact, on this weekend, I'm heading over to Amsterdam. There's an accounting software called Twinfield that is a very, very dominant force in EU, and they're about to do a big expansion in Germany. And there's a lot of businesses in the United Kingdom that are using Twinfield. So we're going to be, just like we do QuickBooks and we do Xero and so on, we're going to be adopting Twinfield to this. Okay, so what we found was that in the European Union, the EU, that even though our software is a licensed software, it's not really sale, no one's buying it, they're licensing the right to use it, they changed the laws. There's going to be a VAT tax. And the minute they do it, because of their relationship with the United Kingdom, there's a VAT tax there. And when they do it, then Australia will do it and New Zealand will do it. So bada boom, bada bang, all of a sudden I'm going to have to face different VAT taxes on 12 countries in the EU and 4 countries in the 4 countries in the United Kingdom. I mean, there's no way around it. So, oh my God, what do we have to do? These are regulatory requirements that we have to face. How about your clients? Are they facing these same type of things? Balance sheet forecasting, we talked about that. Even if they don't need a loan, I think a balance sheet forecast is an incredible tool because it helps them understand where their actual capital is going to be over the next 1 year, 2 years. How can you do business planning if you don't know that? I mean, it's a wing and a prayer, and you're kind of, yeah, go get them, boys. These are real things that are needed by our business clients because essentially our clients don't understand fiscal and asset management. They need, by the minute they've hit, when they've left being a micro business, they're well more than $1 million, $1.5 million in revenue. The minute they move past that, they need someone who understands fiscal management. They need a CFO type person, but they can't afford them, and it's certainly not their forte. They don't even understand where their real break-even is. Now again, if you've been to some of my other classes, you've heard me talk about this, but really what is a true break-even? Well, first of all, do they have sufficient cash reserves to manage cash flow fluctuations? Certain businesses are seasonal. Your business is seasonal. You have a tremendous amount of cash that comes in 2 times, maybe 3 times a year, and then the rest of the time you're just kind of floating because there isn't a high amount of revenue that's generated by that. certain seasonal businesses, general contractors, the trades, they are very seasonal in nature. Does the client really understand that they need to build cash reserves? Do they understand that the only way you make money tomorrow is to spend money today? Have they accounted for their needs in growth as part of the business strategy? And they really, you know, how do you do this? This is one of the reasons why one of the first features in Prophecy was scenarios. What if we are going to expand into Eau Claire? You know, what will the office cost? What are the employment needs? What is our target audience? What's our marketing? Do we need support? Do we need service? What is the front end cost? Are there one-time things? Are we going to do advertising? What is our revenue objective? How long will it take to get there? How do I build this model so that I can see that it makes sense for us to go there? And even if I'm going to persuade the bank to help capitalize this, the bank certainly is not going to do it unless I can show that I actually have a contribution in it from both cash reserves and growth capital. So the clients, they don't understand how to do this. It's not that they don't want to do it, it's they don't understand how to do it. Now, frankly, where are they going to get help? I've had an observation that I've seen a lot of these CFO for hire groups. Maybe you have them in your locations. I know up here in Minneapolis there's a franchise group that is literally called CFO for hire. And several years ago they came in to look at our tools, and I was astonished to find out that these were not really, even though they had been CFOs at other companies, they really weren't qualified to do CFOs. What they were was controllers. They were cost people. We're just trying to reduce the cost, so to optimize, you know, we'll shrink the staff, and we'll this, and we'll negotiate hard. And I'm sorry, that is not what builds health in a business. Now, if a business is near bankruptcy, yeah, you squeeze it down, you make it profitable, you either sell it or you try and rebuild it. But that's not what most people need in their companies. They need to understand what are their resources, what are their real assets, their known hard assets, their strategic assets, their soft assets, and how do they leverage the rate of return on that? How much money do they have to reinvest for growth in order to help bring that around? Your client should have a little bit of money for risk. This is over and above reserve and growth. Risk money is capital that's available to me for maybe launching a new line, starting a new branch, deciding we're going to go after mid-sized growth businesses as opposed to just micro and small businesses. You know, if you have a couple hundred business clients, I realize it's a bell curve. You probably have a couple of biggies in there that maybe are 100 million, 200 million, maybe larger, but the bulk of them will tend to fall into a spread of 2 to 10 million. Maybe you're more involved with businesses. For example, one of the things that Twinfield has is, I think they have 20,000 companies that use their product in Holland that are all fast growth companies at an entry point of 5 to 50 million. Okay, wow, what a nice opportunity to be in. But the point is that unless they are large enough that they can really afford a true chief financial officer that knows how to do this, your clients don't have anyone. So this kind of boils down to who can they trust. Many of you who are, you know, repeat to some of my presentations have heard me say this many times. Business owners cannot talk to their employees. If they're making a lot of money, the employees will want to know why they're not paid more. If they're not making a lot of money, the employees, your best ones, will start looking for other jobs. If you're at a kind of a critical point where the performance of the team over the next 3 months is going to mean a lot for the rest of the year, is that something you tell the staff or not? Most business owners don't like talking about, you know, hardcore financial issues with their employees. So the question is, this is pretty dear to the heart. This is their livelihood. This is their survival. This is for their spouse, for their family, for their children, for the future of the employees and their families. Most small business owners, if they have less than 50 to 70 people employed by them, are very close with the people they employ. And they feel a responsibility to them. Those people have entrusted their life survival to them. So who can they really talk to about money? Well, they're not going to talk to their lawyers. Even if the lawyers knew what they were talking about, they don't like the fact that calling up the law firm to find out how to drive to the office will get them a bill for 15 minutes of time. They trust you. You are the people they trust. Now, as we know, most people in accountancy are wildly extroverted and great with social skills. So, of course, it's easy to talk to us. Not. Okay. Accountants tend to be more introverted, a little more reserved, and social skills, well, some of us have them. But those are critical elements in your job performance because your practice depends on your relationship with your clients. And if you're only literally seeing them once a year during tax season, they come to you. They have to have the taxes done. They trust what you're doing in taxes, though they probably grumble under their breath for what you charge them. And in terms of trying to strengthen your relationship with them, the industry falls flat on its face. It's not until you get into the really larger firms, the big four, some of the big regionals, that the relationship with the clients is just as important as the efforts that they make with their services. We're obviously, Prophecy is going to be opening offices in the United Kingdom, and we're right now assessing several cities as to where we'll put our headquarters and what other cities we may move into in the next 6 months. And you know, initially when we went there, the hosts were trying to show us where the software developers held their offices. And I said, you need to understand, I'm not going to be hiring any developers in the United Kingdom. You're not hiring any programmers? No. Our programmers are all, they're Germans, they're Czech, they're Austrians. We have a Portuguese guy who worked for KPMG for several years. He's come on board. I said, no, I'm not hiring them. Well, who are you hiring? I said, we're hiring people that are going to live in the financial district and work with accounting firms to help them provide greater services, not just through our tools, but how the services take place. And they're looking at me dumbfounded. I said, you have to understand, software developers wear blue jeans and hoodies. We wear suits and live in the financial district. Our efforts are not going to be happening in our offices. They're going to be happening over a coffee, at the pub, at dinner, and at our CPA firm's offices. Because our objective is to help them help the community. Can you say that about your practice? Is the purpose of your practice really to help your business clients and their success in their communities? I think we need a major rethink as to what it is that we're really doing. The statement, money makes the world go around, is not only true, it's absolutely true. Everything we do is predicated on trade. No man or woman is completely self-sufficient to what they have. Even if they're obscenely wealthy, we're still dependent on other people for creating our clothes, creating the gasoline for our automobiles, the transportation, the travel, the energy, the insurance. I mean, it's all built on trade. Most business owners don't understand how their assets, their capital assets, work in the trade, but they trust you. We really need a rethink of what services we're actually providing. Now, let's face it, since the late 1950s, we've had a population growth in the country that's unending. We've had a complexity in the tax and regulatory law that's unending, and people have to come and do business with us. But unfortunately, the GDP is not growing as fast as the population, and the poor are getting larger in number, and income is going down. The need for what was our bread and butter is facing a price shrinkage because it is becoming commoditized. Unless we take on an attitude that says we're here to help them prosper, we're really barking up the wrong tree. When I've gone overseas, I get a lot of questions, particularly in Australia, as to what accountancy is like in the United States. And I said, well, there's the big four. Oh, yeah. Then there's the regionals. There's 8, 9 of those. Moss Adams, Baker Tilly, I. Bailey up here in the upper Midwest. There's, there's several of those. I said, then there's, fairly strong local firms, 20 to 50, 60 accountants in them. I said, but what's interesting is the pressure is coming on the middle, the mid-sized firms and the smaller, the regionals. They're the ones that are facing the financial pressure. And the people who are really doing well, I call the young and the nimble. They're the ones that have figured out in the United States what I'm talking about, that we have this responsibility to our business owners in helping protect their money. Because it's not how much they make, it's how much they keep. We're helping them keep money from the tax side and also hopefully keeping them out of jail. But more importantly, they need to find someone they can trust in. And very few of them can afford the cost of a true CFO, assuming the CFO knows what they're doing. Now, one of the things I have always tried to do is that I want to make sure we have an efficient and best use of time. So, obviously when I started Prophecy, I was both the president and the CEO. But we're at the point now, because of the global expansion, I can't be the president. So did I hire an outside president? Absolutely not. I groomed a president from within our team, and this year David Frederickson is the new president of our team at a ripe old age of 28 years old. He's incredibly talented. He understands operationally what's going on. But I had to move out of being the president because that wasn't the most efficient and best use of my time. So what does this mean in terms of your opportunity with your business clients? First thing is you have to recognize that most of them do not have a CFO. And that even if you start with very, very basic things in terms of services, like explaining what their real cash positions are, even explaining to them what balance sheet forecasting is, helping them understand how the P&L works. If you don't do that, you're passing up the largest opportunity ever. And it's not just so that you'll make more money. You will, but what you're really doing is building a lifetime relationship with people that have a great trust in you for helping manage their capital, helping them keep as much as they can, and hopefully their ability to pass it on. So there's a huge opportunity, okay? Now, when a lot of people ask me, well, my goodness, how do I do this? I have a business client. What is it that I'm supposed to do? They've come in for their taxes. I've been working their corporate tax side, their business tax side for 10 years, and they're doing okay, and, they make enough money. What are their real needs are? I'm sorry. The number of people I've met that really understand fiscal management are so small. And most small business owners either hit a ceiling or they wind up in an effort that is basically self-employed with helpers, right? It's the millionaire next door, but the company can't do without them. They couldn't possibly take 3 weeks off to go on a visit to the Greek islands. They couldn't do it. Probably the best thing for them in their world, just to get rid of the stress and slow down the clock, restore their health. They can't do it. The company will collapse. So you have to be able to not just look at saying, well, he's paying himself $285 a year. Isn't that wonderful? And I've got them at an effective tax rate of 140. Well, God bless you. You did a nice job on their taxes. But the opportunity lays with their overall wealth. You have to recognize the opportunity. Now, once you've done that, then I think the very next thing you want to do is what I call the apology. Now, what do I mean by this? The objective of this week is, this training class, is to show you how to set up the ability to bring these clients on a retainer We are going to talk about why a retainer, not a project, not a fee. But I think the next thing you have to do is offer an apology, and it's a very simple statement. You know, Frank, Shirley, first of all, I want to thank you so much. You've worked with the firm for many years. I know I haven't spent enough time with you personally. My error. I really want to take a little more time with you guys, even if it's just casually to let you talk about what's going on in the company. But I must tell you, I do owe you an apology. And they're going to go, oh my God, what does he owe us an apology for? He does a good job of their taxes. And well, maybe he's going to apologize for us charging us too much. I mean, who knows what they're thinking? But they're going to wonder, what is it that you're about to apologize for? Here's what you want to apologize for. You say, you know, I do your personal taxes, I do your corporate taxes, I go through the business. And in the same way that I assess your personal tax needs and we build strategies on how to optimize so that you can keep as much as you can, I've been looking at the company and I really have needed to do a financial assessment of the business for several years, and I've been afraid to bring it up, and I really owe you an apology. Now, what have I just done? I've told them that I've looked at the balance sheet and the P&L in their business for years. I can see certain factors and trends. I can see certain things that are appearing within the organization. For those of you who have been on some of my other training classes, I talk about the 8 disciplines of running a company, defining and fulfilling the client experience, how do you create top-of-mind awareness, how does the efficiency, the mid-office, back-office operation run, how do they manage compliance and regulatory, what's going on in terms of technology to build real efficiency, human resources and organizational development, fiscal and asset management of companies, strategic and functional business planning. Trust me, there are gaps. There really are gaps. And you offer an apology because you can look at those things, and even with small amounts of information, certain things become very, very clear. Is there high turnover? You know, are they losing people? Or is it the same collection of people, but they don't see any sustained growth? Or is the growth such that it's so self-contained that it's obvious that the growth is only there because the owner doesn't know how to delegate authority and therefore carries all the responsibility? Trust me, you will see things. And that's when you offer the apology. You need to offer the apology. Now, once you offer an apology, what is it that we want to propose to them? I would just make a very simple statement. What are you apologizing for? Now, I've offered the apology, and they're going, oh my goodness. Now, have I raised their stress level? Yes. And I've done that intentionally. Because most people won't change what they're doing unless they feel there's some danger or some threat or they're traumatized and so on. But again, if I really am being a fiduciary to them, and I really do understand what I'm reading in their balance sheet and their P&L in the years I've been doing this for them, I not only have a fiduciary responsibility, I've got a moral responsibility to talk to them. So when they're feeling, bad about this, then you're saying, now, I'm sure you're wondering what it is that I'm seeing. Really, I understand. But frankly, in the same way that we get all your information to do your taxes for both the business and yourselves, I really need to do a review on the company. And so you're basically presenting them the fact that as soon as tax season is over, I want to do a review. Now, you might say, I've never done a business review. How am I going to do a business review? Well, first of all, there's a lot of information that's available on how to do a business review. I mean, if nothing else, go back to iShade and listen to some of the other presentations I've done on how to do these type of reviews. But there's books, there's all kinds of things to know how to do a review. And maybe you just take on one client, or maybe you take on 2 until you get a little more comfortable with it and you kind of learn the ropes. Now, I know change is scary and we're introverted and don't bother me. You really have to do this. It is a responsibility. But you're going to run a review. Okay. So when you run the review, you're going to be able to create a presentation. And the presentation is essentially what you discovered. Now, people have asked me, should I charge for this? I go, absolutely you should charge for it. Well, how much should I charge for it? Well, you know, frankly, when I've done a business review and I'm creating a strategy for them, the prices range anywhere from $5,000 to $30,000, depending on the size of the business. I'm not saying that necessarily you can, you know, build that much, but maybe you just want to start a little more basic, and so you make a presentation and say, you know, normally when we do a financial review of a company, it costs $1,500. But you're a lifetime client. I've been the one that's in neglect. We'll only bill you $750. I'll cut it in half. However, I'm going to make this promise to you. If for any reason you are not pleased with what I have discovered, I will hand you back the check. There's no charge to it. Now, again, I'm not going to hand you the review. I'll keep the review. But is that something you're willing to do? I'm very concerned. And trust me, if you have any kind of relationship with your clients, they will allow you to provide that presentation. Now, is the presentation a proposal? No. The presentation is nothing more than making them aware of where their gaps are, what's missing, and essentially escalating their concern. I want to escalate their concern. Because what I really want to do is put them on a retainer for our services. So what are our services? Our services are fiscal management. The services are providing them the financial reports, the KPI, the P&L, the balance sheet, but also making sure each month I have a designated time that I am talking to them personally about what we're discovering. So one of the reasons Prophecy was built the way it was the ability to not only do all these kind of analytics, but automate the reports, making the time effectiveness for you ridiculously efficient. It doesn't mean you can get away with not understanding what you're seeing. That's the advisory services you make. But it does make it much easier to do without having to download value sets from QuickBooks and throw them into a spreadsheet and run the analytics and so on. It automates it. So, from what I used to do, before we had Prophecy, I had all the tools built. I ran the analysis. The tools were ones I had built. It took about 5 minutes to generate the reports. It took about an hour and a half to assess what was fundamentally wrong. And then I created a presentation, and I met with them for an hour, and I billed $3,000 for it. Now, when I was billing 25 or 30, it was when I was going out on site, and I was interviewing everybody at the company, and that was like a 2 or 3 day event. And I'm not suggesting that's what you want to do, but I am suggesting that your clients desperately need to become aware of what's going on. So why would I suggest you do this with a retainer? Well, the problem with billings by time is people get afraid to burn any time on the clock. And it's what they are so uncomfortable about with lawyers. And frankly, I don't want to tell them how many hours or what my bill rate is per hour. I really don't. I was assisting a company out in the West Coast a couple of years ago through this type of reporting and analytics, and I was working with essentially the general manager of the organization, because the principals were salesmen, and they were off doing their thing, and they basically wanted the general manager to report to them what was going on. So every month I would have a meeting with this individual. We'd nominally set it at an hour block of time. If it took more, who cared? If it took less, fine. They were comfortable. And people asked me, well, what did I charge them for this each month? I said it's about $1,250 a month. Well, how much time did you spend doing it? About 15 minutes of analytics before the 1 hour meeting. And their jaws dropped. You billed out at over $1,000 an hour? I said, no. I provided $1,000 of value a month that they felt was worth tens of thousands of dollars. I never ever want to be defining for my clients what I bill by the hour. What I want to do is define what is the value of the services and what is the fee, what is the cost of the services. So literally, even project work, I don't like project work. People get uncomfortable. The reason I want to go on a flat retainer, and you need to go on a flat retainer with your clients, is that they know that's a fixed expense, it's the same every month, and they're not worried about the clock. What they're worried about is what they're going to learn from you. So next month, we're going to discuss how do you define the service, how do you put together the proposal, how do you close the sale. We're going to spend a lot of time talking about how to build this additional side of your practice. Now, is every one of your business clients a viable opportunity for this? Well, I don't know, but let's face it. If you could go on a $1,000 a month retainer with a $5 million business and you're giving them CFO level services, it's going to cost them $12,000 in a year as opposed to $12,000 a month to have a CFO. And if you just can help fix one kind of flaw, one different element in that company, their ability to generate $50,000 to $100,000 to $200,000 in margin is way past the $12,000 that they're going to pay you on a retainer. Now, how many business can you do it with? I don't know. But let's face it, if you're doing $1,200 in a monthly retainer and you have 10 clients that you're doing it with, what's the time out of your pocket in off-tax season months? 15 hours a month, 20 hours a month, and you're putting $12,000 in margin into the business, into the practice that wasn't there. But more importantly, you're building up the financial performance of your clients. That's how you get referrals. They'll brag about you. You will build your practice, and there is never a better time of doing this than tax season, because that's when you're belly to belly with your clients. That's when you're actually looking at what's going on in your businesses. That's when you can apologize, and that's when you can provide them the services that are so desperately needed. So that's what I wanted to cover today, and obviously looking forward to visiting with all of you. Hope you can come to the next month's presentation. If there are any of you who had to jump out or had signed up today and couldn't do it, you can certainly listen to it either on the My Prophecy Academy, or even better, to do it over at iShade. And I'm going to turn it back to Nicole, our hostess here, and we'll look forward to answering your questions online.
Thank you, Peter, for your presentation today.
Mm-hmm.
So now I'm going to go ahead and give you guys a quick demonstration on how to access the Ask the Expert Q&A session on our website. So let me go ahead. Pop this up here. Oop. Okay, so you're going to go to iShade.com, and then you're going to log in. Oop, I'm still getting this in here. There we go. Sorry about that. We're going to log in the upper right-hand corner, and then you click on the Ask the Expert tab. And then once you're in here, you're going to click on the Join Now under today's session listing. And then once it gets in there, you can scroll down underneath the content here, and you can type in any of your questions here. And thank you for joining iShade today. Please check back on our Ask the Expert page periodically as we post new exciting webinars. Thank you so much.